In the last ICP video, we talked about how important that structure was, that we formed some form of structure at a support base. We talked about the 200 daily moving average as the big lifeline that we've got for ICP. We expected a rejection at $9. We expected a deep pullback. It went through the acceleration gap like a hot knife through butter. What goes up just comes down as quick when you don't have that buildup of structure along the way. So we're going to look at the 200 daily moving average on ICP today. What needs to happen next? What are the projections in the short term? What happens if it goes wrong? Let's dive in. And this is the important level. This is the $5 mark. Why is this $5 mark so important? We did talk about it in the last video. We said psychological numbers, $5, a round number. When you put buy orders in and when you put sell orders in, collectively, as a group of people, that's what traders are, a group of people, collectively humans go straight to round numbers. And that's why round numbers, big round numbers, get a reaction whilst it hits the chart. That's because of that reason. More people are putting buy orders, more people are putting sell orders. When price hits that level, we get a reaction time and time again. So it was important that we broke that $5 resistance to act as support because that allows for one thing. Remember, we said the 50 paced moving average, which is 4 times faster than the 200. If we maintain support at the 200 daily moving average, over the next few days, one thing's going to happen. The faster paced moving average is going to start moving up. It's going to start moving up. It's going to start moving up. Now, what happens when the faster paced moving average starts moving up? You get, my friends, a golden cross. So this is a big retail indicator, and this is what we're waiting for. And the only way that we're going to do that is holding $5 for the next few days. So we know exactly what we need to do. It's a case of holding, holding, holding. I'm not telling you to hold. ICP needs to hold this $5 level, this 200 moving average, and then we can start seeing an extension, and then we can start seeing an acceleration, and then we can start looking at recovery. We're holding support at $5. We're holding the 200 daily moving average, and we're starting to create that structure base. So this is important for ICP. The second thing that we talked about in the last video was this, the RSI. So the RSI was overbought here, massively overbought here. It went all the way to 88, and then we got a rejection. That was at the $9 mark. We got a rejection. And remember, above the 50, you're bullish. Below the 50, you're bearish, depending on what type of trend you're in. We're in an uptrend. We've just broken the structure lower high. We've put in a new higher high. We've come back down. We've created a higher low structure. And we're looking at the RSI next because this is indicating once we break the 50 level that that's going to give confidence. So you can see we're currently at 48.96. So a little push up on this, little push up past the $5 mark would bring the RSI back into positive territory. So we don't look at this in isolation. We look at it in conjunction with the stochastic RSI, the RSI, price action, structure resistance, structure support, and then understanding what the likely scenario is going to be going forward. So where is the next resistance barrier for ICP? You can see we've got a rejection here at $5.49. Got one rejection there. Does it mean that we're not going to break through this level anytime soon? It's a high probability that we will break through this level because one thing that is rare is if you're going to bulk up, bulk up, bulk up, bulk up for weeks on end. You're waiting to make a base. You're waiting for the market to make a move. You're waiting for a reaction within the market. And then that can have a knock-on effect with ICP, and then we start seeing those pushes to the upside. So $5.49, that's the rejection in the short term. We've got $6.17, which is the top of the accumulation phase. So this is the accumulation phase. This is the kill zone. This is the acceleration gap. So in the short term, we need to start pushing back out of the accumulation phase, back into the acceleration gap, and then start creating structure within the acceleration gap, ensuring that we're putting in higher highs, maintaining higher lows of support, and then getting confidence to push up to the new highs. So as far as the market's concerned, you can see one thing. Yesterday, we were 11 out of the fear and greed index. That's the lowest point in 4 years. We're back at extreme fear. We're at 15 today. The market's got a little bit more confidence after yesterday's afternoon pump, but still, we are in extreme fear. You could go down and you could see exactly what happens in markets when you're in extreme fear. Has the reversal effect. We're in extreme fear here. We're in extreme fear here. We're in extreme fear here. What happens when you hit extreme fear? You get a big, big, big push. You get a big push into extreme greed, into euphoria. And that's something that we haven't had this cycle. So as far as ICP is concerned, it's a case of keeping an eye on it, monitoring it, ensuring we hold that structure support on the 200 daily moving average on the $5. And then once that happens, We are oversold. We're waiting for an indication as far as the market's concerned to make that move, and then ICP can move along with the market. So as far as the market's concerned, I'm going to be doing a big macro update. My thoughts on the current market at the moment. We're going to be looking at Bitcoin. We're going to be looking at dominance, and I've got all of the altcoin requests from the Discord group. So it is going to be a bit of a marathon. I'll see you later on today. Bye now.